Hi friends, Simit here from InformedTrades.com, and today I want to talk about the recent developments in the financial markets, particularly the U.S. stock market. We've seen a big sell-off over the past week especially. So the question on a lot of people's minds is this it? Is this really, the beginning of a bear market, the end of the bull market that's been in place since 2009? Personally, I think it's a major inflection point. I have sold a bunch of my positions in stocks that I've used or thought of it as growth opportunities, positions that are where I want to take profit, or in some instances where they're losing. I think it's going to go down further. Whole Foods and Amazon are probably the two biggest positions I had that I'm now closing out. The reason for that is in the charts, and let's take a look at those.
Okay, first chart is S&P 500 monthly chart here. We see a clear, decisive break of the channel that price has been in. And this channel goes back to September of 2011. So almost 4 years, just about a month shy or a couple weeks shy of 4 years. Actually, you could even, you could say the trend line goes back to August. You could conceivably, well, sort of. But basically 4 years. And we've just now broken decisively below that, right? So it's possible that we'll get a retest, back up to 2038. Often that happens when you break a support level, and price will then, perhaps continue going down. I think there's a strong case to be made that, because we've broken out of this channel, sell any rallies. Also worth noting here is that this rectangle in red could constitute a distribution period where you see price going roughly in a range. So basically, since what is this, March? Since March of this year, price has basically been in a range, right? So that could be seen as, from a volume spread analysis perspective, a distribution phase. So, smart money is selling here, and now market is ready to go down. And really, if you think about it, we could go all the way back down to 1588, which is, basically the high that we reached in October of 2007. If we fell back there, that's still only the 38.2 retracement of the March 2009 lows all the way up to the recent all-time highs here. Even I think a 50% retracement back to 1424 is also likely. We do have, if you're looking at trend lines, probably the next major stop is 1800. That's sort of the way I see it. Then we run into a tentative trend line that goes back to the 2009 lows. So you could argue that we're still in an uptrend from the 2009 lows if we preserve or stay in 1800. And the way I see it is that, I personally sold here, or this past, a little late obviously, sold, in hindsight it's 2020, but it would have been better to sell around here. But I sold on Friday. If we stay at 1800, if the market can bounce off that and resume an uptrend, that could be an interesting time to get back in the market. A sign that maybe the crash isn't really coming. That's the monthly chart. If we look at the weekly chart, same idea here. Sometimes it helps to zoom in a little bit. We're out of the channel. You can see the range, the distribution range that we were in a little more clearly here. And where we go, because it's a weekly chart, doesn't go back to 2009, but that trend line, 1800, it could be right around here. Of course, it's not just the S&P 500. That's the biggest, what I'm going to focus on in terms of stocks. But you can get the idea that we're in another crash, in for another big deflationary sell-off where everything gets sold and there's a flight to safety of some kind. You can see that in other assets as well. And it's definitely where we're seeing a lot of that is in the commodity sector. Here's crude oil. I got long right around here, low 40s. I'm still keeping this position on. But what I am doing, I have capital allocated already if oil falls into the 30s. There's resistance, long-term resistance going back to 2009 at around 33. We've passed the lows. We haven't been this low in quite some time. You can see it goes off the chart. Haven't been this low in a while. And we also broke down past the recent lows that we saw in March of 2015. So again, we're seeing another, even as the stock market's selling off, we're also seeing a sell-off in the commodity sector, especially oil here. Copper, another commodity, same story. We're about to run into, this is a monthly chart, we're about to run into a major trend line, tentative trend line, at around 211. And that will be a trend line that goes back to 2003. You can see it's actually a bit of a channel. And that could be an interesting time to buy. Let's see how price behaves if it hits this line. But I've got an alert set up where if price is 211, to at least examine it. And again, this is a monthly chart, so you have a little bit of time. If price bounces off of it or shows some signs of what I would really like, shows some signs of trading in a range at this trend line. An accumulation phase that would suggest an accumulation phase is playing out. That could be time to buy, and price could go way higher. If we look at this trend line, we see the channel is still valid. We're looking at $4.75, $5, and that's sort of even though I'm selling. If we look back to the S&P 500, the monthly chart, you can make an argument that the same thing is going to happen here, where we fall to 1800, but then you could say, a trend line from here even, if this trend line comes back, or even go from here maybe, something like that. You could say if we fall to 1800, you could say there's going to be a new high, 22, 23, somewhere around there. And that could be something to consider. Selling now and buying back at 1800. Copper, waiting for a fall at 211. If you believe that this is not really a crash, and I'm definitely open to that perspective. I do want to see how price reacts if it falls to 211 on copper or 1800 on the S&P 500. For now, though, to me, it definitely looks pretty bearish. And bearish in a way that because these are major trend lines, it's a little more significant. This is not just interim or short moves that we're looking at here, short-term moves. Treasury. So we've talked about how commodities are declining. The S&P 500 obviously had a sell-off, broke a major trend line. U.S. Treasuries, this is a weekly chart, still rallying. And it has rallied 1, 2, 3, 4, 5, 6 consecutive weeks. 6 consecutive weeks, broke out of a downward channel, right? So we saw the S&P 500 break down out of a upward channel. Treasuries, long-dated treasuries doing the exact opposite, breaking up out of a downward channel. We are now above this resistance level 2. So this also fits into the whole flight to safety idea. We're seeing a sell-off in commodities, a sell-off in stocks. That suggests deflation, decreasing demand, and we're seeing treasuries rally. Investors are looking to park their capital in something safe. That's sort of one interpretation, basic story that I'm seeing playing out. Very similar to what we saw in 2008. Is the exact same thing going to happen? I'm not convinced because, like I mentioned, with stocks and crude, or stocks and copper, there's still that major support level that we're about to run into. 1800 on S&P 500, 211 on copper. If the market can defend those levels, then we may be ready to go higher on those too. So that's sort of what I'm thinking, but definitely, at least in the short term, these trend lines, these major trend lines that we're seeing, this treasuries, well, this only goes back to the beginning of the year, still somewhat notable, but not like the S&P 500 and copper, where we're seeing multi-year trend lines that are broken or about to be tested. In terms of flight to safety, gold has done relatively okay. It's still in a downward channel, but it hasn't really shown a big breakdown that we saw in S&P 500 or that we saw in crude or copper. Now, gold has declined significantly from the 2011 highs, right? If you look at here, this is 1900, and now we're down at 1150. So that's definitely a big decline, and maybe gold is just leading the pack. It doesn't quite fit into a flight to safety story. Treasuries, I think, is the better flight to safety story, where we're seeing everything else sell off and capital going into treasuries, U.S. treasuries. Something that I thought was interesting, and I don't quite know what to make of this, but I do think it's interesting and thus worth noting. Uranium, I have a fairly large position at least relatively speaking, for myself in uranium, in the actual commodity, and then also in uranium equities. The uranium equities have definitely gotten hit hard, but I'm not selling those because I think those may be at a bottom. So I think ideally I would have entered the entire position now, but if anything, I'm considering adding to the uranium position now. And uranium has been pretty flat. So I'm not sure what's going on here, whether that's uranium's holding its value out of concerns over war, or because Japanese reactors might be restarting, or something to that effect. But I do think it's interesting. In the commodity sector, we're seeing commodities of all kinds decline, but uranium is holding its own. That's basically it. Just sort of a recap of the charts. From my perspective, it's definitely a good time to sell. If you're sitting on a lot of profits, that's definitely a good time to sell. Or and not only taking profits, but if you have positions that are down, I have positions in Whole Foods that's down, significantly, about 20%. I closed it out anyway because I think in light of the break of these trend lines and equities, it could still fall further. So I'd much rather see the bottom and then re-enter there. Like I mentioned, one thing I'm looking at for the S&P 500, I mentioned this repeatedly, is that 1800 price level. If the market can stabilize there, if we can see an accumulation phase forming there, that could be an interesting time to buy. Also, copper, keep an eye out for. Right now we're at 225 on copper. If it falls to 211, that's going to be testing a trend line and channel that goes back to 2003. So definitely a major trend line. I think that could be a great time to buy one of those once in a decade time buying opportunities. That's about it. There's going to be a lot of talk about what's going on in the markets this week. I definitely think it's one of those key points. If you're more of a passive investor, this is one of those times where I think it's worth paying attention. We could be at one of those major inflection points. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading and investing, and we'll see you next time. Take care.